Okay, guys, so we had a very interesting situation last night with Mr. Powell giving his answers to a question and answer situation regarding the economical progress that the US is making, and we saw some very volatile price action. Now, let's just look at what happened, because this is really important to understand. So he started speaking about here, about 18:30 my time, about 5:30 UK, and this Fu Manchu indicator gave us a buy signal here, and we had seen some momentum beginning to build. We're below the 200, and we're also below the 20 EMA, so our system wouldn't have taken a buy at that point, but we wait and we wait, and we are looking for a 90-minute window to get in, and sure enough, the green histogram bars with building momentum have started, and we broke the 20 EMA here. We would have taken the trade there and rode it up for our 0.76 return and our 0.36% stop loss. So we would have had a nice £30 win, 31.10 or 31.10p if you're in English money. Okay, so far so good. Now what's actually happened is that the market maker is now decided that there's a lot of buying pressure. Now, what happens when people buy? When you place a buy order and most people take a market position, that order has an obligation from the market maker to be matched, i.e. he will take that buy, but by definition it means the market maker is of course taking the opposite position, which is a sell. So we have to be mindful of the fact that he's now providing the liquidity for you to enter this buy position, and when you buy, he's taking the opposite position, which is a sell. So he is selling here. So he's now finding that there's plenty of momentum coming up because other people are buying too. So he's now building his shorts, i.e. he's got a pile of selling pressure here. Now at that point he's going to have to start to think about getting some of that short positions returned, and there's several different ways that he can do that as a market maker, and this is his business model. When we're entering his market, we have to play by his rules, and as such, if we see these rises, his sell positions down here are becoming less and less profitable as the price moves up, because remember he's matched those buys with a sell, so the market maker is exposed in the sell position here. So how can he recover that? Well, we saw the candle build up, and then you can see that the candle wick here at the top just started to fall back, and this is where he is hoping that he can trap all the people that are climbing on, jumping in all the way up to here. They were jumping in that wick there, and most 95% of traders would have taken a market order and put in a stop loss, down here somewhere, or here, or down here, whatever that might be. Now that stop loss is a liquidation point of that trade, where he can actually collect all the money that was deposited in the trade and recover it if he is able to reverse that position. So we've now been happy because we've managed to take our profit. And what happens when we get to our take profit? By default, of course, we are closing a position. What does that mean? It means that we are selling. And what happens when we sell? The market maker buys that position back. So he is now taken a buy here because we've sold to him. So now he has made his situation worse because he's sold down here and the market maker has bought up here. So he's now got a significant loss to recover just on our trade. But if you can imagine the millions and millions of pounds that have been pledged down here in buy orders, which he's had to match with a sell, if everyone started to take profits here, which obviously some people would have done, he needs to recover these big moves. This is a massive move in a 15-minute time frame. So what's going to happen next? Well, let's move the chart forward and we'll see. We'll go on my one frame. And you can see now that that candle there starts to show clear reversal. And what's happening is that now he has decided to move the price back down again to recover the positions that he is in a negative. We're in at lower prices. So he's now got the retail trader trapped. He's now liquidated shorts because the stop losses would have been here and down here, and now he's collecting all that liquidity from the positions that he's been building. And if we go to the next candle, 15 minutes, we've recovered we've recovered everything, including this one down here. So now Mr. Market Maker has got a grin all over his face because he's been able to build his shorts up. He's got all these long positions now where he's now building his longs, because as people then realize at this point that the market is going down, what are they doing? They're thinking, oh, short, short, short. So he's now buying. So he's now buying his positions, and he's now got to get that position matched on the other side. Now, the good thing is for the market maker is that because he's liquidated in the space of literally half an hour, all those people that would have had a stop loss put in all the way down here, he's now collected all that money where he's wrecked all the traders and collected all their stop losses. Absolutely brilliant. Welcome to trading. This is wonderful. And this is the point where I obviously was able to realize, because we know how the market maker works, that we will see a reversal. What have we always said? Big fast move up, false move. What are they doing? Stop hunt. They're hunting for liquidity, and the hunt is for those stop losses all the way down. So they reversed it, brought it back down, liquidated all these people. And by the same token, the sellers here, that means the market maker has been buying. So what do they want to do next? Liquidate all these guys. So by the time we get down here, people think sell, sell, sell. And we do get another one. So he's now completely recovered all the liability he had. People have continued to sold, which means that they've been buying at low prices. The market maker has been buying at low prices because they're matching the retail traders' sells down here. And what will happen next? We'll see. Oh, they're still loading up on those positions, but they're going to reverse it. And what's going to happen next? Oh, wonderful. And now he's recovered all that, and then because he's been building his longs down here, he's now got retail traders trapped. So he's now taking longs from the retail trader, which means he's now building his shorts back up again. That's why the market goes up and down, because he's liquidating people, taking commissions, taking spreads on every single trade. and he's going to walk away from his day, from his desk, a very happy bunny.